Hi, it's David here with Futures Trading. It's been a couple months since I had shot a video, so I hope that you've been doing well with your trading. And thank you to those who have recently joined me. Thank you so much for stopping by. And if this is your first time to the channel, welcome. I want to tell you you're welcome here. I got a lot of information for you. If I sound a little nasally, do forgive me. Just kind of getting over a cold, so do forgive me. But I want to give you some information. I know, again, there's been a couple months here, and I want to give you something that's useful. Definitely, given that the activity is changing just a bit with a lot of the big bars, big wicks, and want to help you out. So let's get this done. I'm going to go over the universal threshold, the price action trend, the price action method. I'll touch on that chart scale just a little bit, but I want to help you with the big wicks and all that just overlapping activity that these guys have been putting out here. This is a library, so take full advantage of the information. I can't say for how long I'll make the videos again. I'll probably do maybe a couple more to help you out. But just use the information. Again, I'm not here to get subscribers and all of that. I'm not into that. Just want to help some traders. That's all. I want to help you guys. Been doing it for a while, so I want to give you some information that can get you what it is that you would want out of trading and make it very simple for you. All right, so let's get into it. We're going to do real time, so stick around. We're going to do real time. We're going to look at real time, and I'm going to make sure I explain this stuff to you while the chart is moving. All right, so but I want to lay out the foundation of what we're looking for. Majority, this may be very elementary for some of you traders. If you find it elementary, do forgive me. I'm just trying to help the traders that don't know, may need a little help. So I want to help them. The wicks. All right. So this is what we're dealing with right here. The wicks. All right. So if you're going up, if you want to go down, it'll be the same. All right. So I've been covering majority on the channel. All right. You want to go down, want to go up. I've been covering majority on the channel. Let me just kind of slide this out the way because we want to talk about what we need to be looking for all the time. First, I've been talking about majority because majority controls the minority. They compel them, so they're forced to follow. There's no negotiation. You have to go with them, and that's what's important. So whenever you look at the chart, I want you to see majority. Majority is important. I've been covering this for a long time on the channel. So if you're new, please take what it is that I'm about to share with you. Take this in so you can go ahead and get your trading to work. I want your trading to be exactly what you want it to be. Majority, the majority rule, you can go Google it. You can look at Wikipedia. The majority rule says that the minority is compelled to follow. So they are forced to follow the majority. All right. So the minority has to go. So now when we look at the chart, that's what we're looking for. We're looking for the fundamental principle that will show up on any chart, any time frame. It doesn't matter what the asset class is. It's going to follow the majority. That's how the market moves. So this wick here, okay, you get this bar, and then you get one coming in after it. All right. So this wick here, you can get in on it in real time. All right. You can get in on it on real time. It may be a bar with no wick, so you may get a wick and then a bar with no wick. It may be both, so you may get one without. However, that's increase majority. That's what you're getting. And so here, this is a form of majority as well, where the body can fit inside of here at least twice. So that's majority as well. Now, if you can get both of these simultaneously together, then it's highly, highly likely that it's going to move even further in that direction. Now, I want to tell you what's reasonable. Let me make sure I go over that. I want you to get in a trade with two bars in mind and only go for that distance, starting out until you get used to trading. Just try to go for what the market is suggesting. If it can do a trend, it can do a trend distance. All right. So just try to kind of keep that in mind, and vice versa. Oftentimes, the bigger body will be attached to the smaller wick. Okay. Now, this may be, like I said, elementary to some people, but I want to make sure that you understand if you're new and you have no idea of how to get trades to work, this should help you out. All right. So now, as you look at the chart, okay, there's a couple of things I'm going to tell you that kind of help boost your awareness about markets. All right. So here, pretty simple. Now, when you look at the chart, I want you to see. Now, you can probably see several scenarios. Here's one right here. That looks pretty fantastic. Even this one, right? Well, the wick is not as big as that one, but you get it. All right, so here we go. Yeah, we got a couple of them in here. And it doesn't matter if it's red and green. It doesn't matter. All right, so that's that scenario. All right, now, the next thing I want to tell you, uh, most of the time, when you get a bar and you don't need any kind of gaps, you don't need any gaps between bars. I mean, I know a lot of people want to go with that. Now, I'll tell you how you can know if a gap will show up. I can tell you it's very simple. It's majority. I'll tell you, before the third bar even prints, you'll know that there's a gap that should kind of show up. Been trading this way for a very long time. All right. So before there ever was an ICT, okay, before there was prop firms, there wasn't no prop firms when I started trading. All right. We'll tell you this. I'm just that old. Now, can you get a bar, okay, and get two closes above the bar or beneath the bar? And it doesn't matter the color of the bar, but preferably green if you want to go up and red if you want to go down. Now, but oftentimes they won't give you the two closes outside the high of the bar or pivots for that matter. So most of the time when they break a pivot, let's just take this scenario right here. When they break the pivot, oftentimes they're going to give you a one up, one back down scenario. All right, and then we're going to take a look at yesterday. All right, we're going to take a look at yesterday so you can kind of see how all of that works. All right, so in knowing this, if you get a bar that can close outside the high, just know this next one right here, 10, definitely on reversals, they're going to come back and bang, they're going to hit that high. Most of the time they will. In times that they don't, that's just fantastic and awesome. All right, I want to go ahead and tell you that it's good that it can go ahead and keep going. But this is what we're looking for. All right, so now let's take a look at the day before yesterday. Then we'll take a look at yesterday, and then we'll take a look at this morning and see if there's some repetition to what it is that I'm telling you, because the chart is offering you reiteration. That's how you read literature. And the chart is information. And so you have to read the chart just like you read any kind of literature for that matter. You have to make sure that you're getting the reiteration being put in front of you. So that way, it sticks. It's gels together with the title, like the title all the way to the last remarks of the book kind of echoes the same message. And so when you look in the chart, you got to see objectively the same things being told to you as the market is being printed. All right. So as they print the candles, you got to see it. All right. So here, I just kind of outline, majority. And that's all you look with the wicks as well as the bodies. Both of them together if you can. That'll just be fantastic. All right. So here we had it. Okay. They leaned into it. Now, I know you see these two arrows on both sides of the bars. I'm going to tell you what that is in just a moment. Okay. And it's very simple. We're going to find that all over the chart as well. Most of the time, people who go inside bar, that's fine. Most of the time they'll stall you out for about 4 to 5 bars. They just will. Okay, so you get a bar here and all four of these is inside of that bar and they'll stall you out. They'll break the high of the bar with. You actually had more than four. You had about four on this side too. Most of the time you're gonna look at least 4 bars. And I don't care what time frame you're on. We'll take a look at a daily and I'll prove it to you. So just look out for that. Just look out for that. Just that's just something to keep your eye out on. Now, again, I've tried to tell you guys a lot of different stuff, but I want to tell you that this is something simple that I want you to begin to look for. It's very, very simple, and I want you to see it. It's all over the chart. All right, so now that you know you're going to get stalled because it got to accumulate, the market got to pause and, just get business going, and then they'll take off again. So here's the other thing. I forgot to cover this one. All right, so when it comes to turns, okay, now I went over this on the channel. If we can get all lows higher, okay, and if we can get all highs lower, that'll be perfect too. Okay, so if you can get all highs lower, well, all three anyway, and preferably we want the first bar or the second bar to be red to go down, preferably the first one. Okay, you want your last tick bar to be the color of your direction. Just kind of helps because you're trying to go that way, and the sooner that they step in to help you go that way, the better it is for your trade. Just want to throw you that tidbit of knowledge. Go back and look in your chart. Just take a look. And should that not work, and that's something I want to let you know. I mean, it came in on first, second, and even the third, and they didn't want to go anymore. So you go back past that, yeah, you might get a little bit more, if nothing more. And this is something I will tell you. You can probably definitely end up with at least this. Okay, so try to go for that if you can. All right, now just a little bit of information to help you along. Now, those are kind of like the three fundamental things you're going to always see on the chart. Okay, so you're going to get the bar, don't want to give you consecutive closes, don't want to. It really just doesn't want to do that. Remember, it's two parties at work here, buyers and sellers having opposing ideas as to which direction they believe that the market will go, and they'll place their orders. So I want you to have in mind what to expect. And so here, if you can get, okay, the bar to turn, and then you get another one that's the trend distance, and then they pull back and give you another trend that's fantastic. You're doing just well. So now we'll deal with, hey, you can pass this leg, just don't pass this one, kind of get that concept going too. All right, now that's something else. I don't want to go too far in that, but increase is important. So everywhere I got the box here, you can see that that's that scenario. All right. And it's approaching 9:30, so 9:30 was right about here. Now this is the day before yesterday, and then we're going to take a look at yesterday. So this is the day before yesterday, it kind of had it right here, and then they pushed up. All right. Now there was a fantastic pattern right here. That's why I kind of just colored this a different scenario. It's pretty good. There's the wick, the wick that's a little smaller than this one, and then the body. Clearly, this body can fit inside there twice, and then it failed. That's bad. Okay, that's all. It's just bad. And then I gave you a couple more. And everywhere that you see the double arrows is just where you see at least 4 bars just kind of hanging out, and just want to stall you out. All right, and that's all. All right, now that's just day before yesterday. Now let's take a look at yesterday's activity. I want to just give you some new information, maybe not new to you, but just some stuff that can help you if you're new to the channel. So I marked this for a reason because yesterday's activity, we'll take a look at it in just a moment. But this is our scenario. Both together. All right, just both together. I want you to take a look at that, both the wicks and the body. All right, so the market had came down. All right, it came down. There's 9:30. Here's our scenario. And let me just throw a line on this. Those other lines, we're going to talk about that in a minute. All right, so let me just throw a line on that. All right, so they didn't hit that line. Okay, they just fell into that pattern, but they didn't hit the line. So they didn't take out that pattern. All right, so now the reason why I'm picking that, now I can go ahead and tell you, look, okay, just take a look. All right, look at this. Look at this move. They wanted to get down there and they couldn't do it. So I'm not seeing that, on this turn, didn't see it on this one. It was right here. I'm like, that's already blown through. They had already made a downtrend back this way before 9:30 because 9:30 came in here. So if we're going to take a dive, then where's that pattern that I was just talking about? There's the wick. There's a smaller wick, and clearly that body can fit in here twice, and they pulled up to it and they turned around. So if there's a chance that they were going to stop, I'm not going to go for this. That don't make sense to me. Okay, this kind of happened immediately. All right, that's all. And so just pick that and see if it turns around. It turns around. Now let's go with this. Let's just take a look at this. That scenario isn't there. The other thing is there that I told you about. Can you get the low? So we had a low here. They had another low here and another low here. All right, so all three of them are higher. That's all. All lows are higher. All three. Okay, that's all three. Well, maybe let's see if they can hold it. Now, I did say on the channel, and I'll tell you again, the mid of all reversals are important. All right, now they close beneath it. That's not fun, but they managed to hold the universal threshold. Now, this is typically your wick zone. You don't want to see them close beneath your wick zone. All right, so those two little black lines on the candle, I'll just move it out your way. You don't want to see them close beneath the wick zone. They didn't. They just went past it, but they didn't close beneath it and they turned around. But they took out the mid of the reversal. So this reversal is weak. Just want to go ahead and say that to you. It's not ideally what you want to deal with. Now remember the bar, here's the bar right here. Even though they broke the low of, remember I told you want to see if they can give you consecutive closes. And it doesn't matter whichever side, they didn't want to do it out that side, didn't want to do it out that side. See if they can give you consecutive closes out of either side. They didn't want to do it. So what you get? 4, 5, 9, 10 bars right inside of this bar right here. And then eventually they work their way out on that side. All right. Now, when it comes to the trend, so if you're new to the channel, I want to tell you what a trend is. A trend is 7 bars. All right, 7 bars in total. So we got 1, we got 2. They got to be green. I'm sorry, they got to be green. Let me come over here. That's 1. That's 2. Okay, and now we get 3. We're gonna go over the universal information. That's 3 green bars higher. Now we got to skip over because this is not higher. That's 4, 5, 6, and here's your 7th one. All right, so that's 7 bars, 7 green bars closing higher. So what you do is you take that distance. If you're new, I want to go ahead and point this out to you. We're going to talk about the threshold again as well, so you'll know that that's universal. Everything I'm going to tell you, you can find it in real time. We're going to go take a look. I'm not going to be before you long. Just want to give you some information that can really help you. And so you project it on your 7th bar, and they got there. All right, now they did a lot of back and forth. They did. Now, once you get the trend, because that was our trend, let me put that back here. This is our trend. Now, this is yesterday. All of that just constant whipping back and forth. This is yesterday. I want to make sense of it for you. I want to help you with it. It's really, really important that you understand that the most challenging thing you're going to deal with when it comes to trading is your timing it. Can you time it? Because I'm going to tell you what to look for. I'm going to tell you how many bars you need to count. I'm going to tell you all the most important information that you need to know in order to get it to work. Your only problem is going to be how close can you get in the amount of risk that you want to be exposed. I can't do that for you. All right. So most of the time, the center of the trend, the COT, this is the center of the trend. They'll come back and hit it most of the time. This is what you're going to be dealing with. And every time they came back, they just managed to hold it and just push up higher. Now, remember I told you about the bar with the consecutive closes. All right, I don't want to have to go back, so let me just kind of put it right here. And you remember I told you want to try to get a bar that can give you, two closes. Don't got to be no gap. Don't have to be any of that. Just can you get two closes? And it doesn't matter either side. It doesn't matter. But preferably, if you want to go up, let it be a green bar and see if you can get two closes. And don't have to be a gap. You just want to see them close outside that bar's high. Okay. And it's also a pivot. So if the market was rallying and then it turned away, I don't care if it turned away 5 bars, 10 bars, doesn't matter. When it comes back, can he do it? So when it comes back, can it break the high and stay outside of it? That's important. Now here, let's get our high here, high '05. Let's get our close here, close '04.75. So they closed one tick back inside that high. I just want to tell you that this is important as well. So this was a high over here. They ran outside of it and they came back and closed inside of it. Same thing here. Let's go take a look. See? All right. So now we know that this is right here. This is important. This is our center of our trend. Here's the 7 bars closing higher. It's really important. Just project that distance forward. All right. Now, and I tried to highlight again that increase scenario. Remember, this is all we're looking for. And I'll throw this back in here in this frame because I know I left it in the other frame. So we're looking for 2 wicks. All right. So we need the 2 wicks. And then we need this. We just want to fit this body inside of, probably can't grab it, but don't worry about it. Want to fit that body inside of here at least twice. That's it. And so can we get them both? And so I highlighted you one to the downside here and they push down. And they tend to go the distance of that pattern most of the time. They push down, but they didn't break the low and then they turned around. And then they gave you this one here. And again, they typically will go the distance of this pattern. Typically, that's kind of how it works. I don't know if it's going to always work. I can't tell you that anything that I'll tell you on here will always work. I'm just trying to give you some information that can kind of get you. Well, that's almost there. It's close. I think they made it though. No, it's because they didn't want to break this high. All right, well, that's pretty close. That's pretty good. All right, so now everything else in between, you can try to navigate that if you can. Here is that pattern here. Let's see, can we get an eye onto how that worked? All right, so that's that pattern here. And again, try to go for 2 bars starting out. Okay, just try to do that. All right, just try to go for the 2 bars here and, just get out. Try not to be excessive when you're first starting this. Try not to do that because you may get yourself in trouble. If you don't know how to do it, I want you to just kind of get in and say, okay, I got it. And now I want to get out of the way. I don't want to stay around. I don't want to be here much longer. They got to here. That's not bad. Now, if you would have caught it all the way with them pulling back up, oh, yeah, absolutely. So that's how that worked. All right. So now that's yesterday. All right. So that's yesterday. They turned the corner. They gave you your trend, wanted to go back up past this high. Absolutely understand they're going to come back because that's that one up, one back down aspect of it. Now you do get the increase of the bodies. Okay, so that's the bodies being increased. See, that's about double. You do get that, but the wicks are backwards. Okay, so we had a small wick, big wick, and don't really care for that scenario. Don't really want that, and kind of got all of that. This one came in picture perfect, but we're in an uptrend. But it did come back to test you, just didn't give you all of this, and then gave you a hard sharp drop. All right, now just want to go ahead and put yesterday in front of you. Now here's a perfect one, but it's happening in the wrong place. All right, it's happening in the wrong place. Increase, now it wouldn't be bad if it would have held. I just want to have put it in context because this is happening in the wrong place, just in the wrong place. And so, this one on this side of it coming back into this turn That kind of would make sense. I know this is back here, I do, and that's why they kind of lifted up. I know that's back there. I do get it. Oh, you even had it here. I didn't mark this one, but you had that scenario here. You had a bigger wick, a little wick, a small body, and then a bigger body. They pulled up to it, and then they offered you the distance of this. Okay, so that's that distance. They would have gave it to you. So it's all over the chart. I promise you it is. I know they offer a lot of back and forth activity. See, there it is. They made it. All right. So now that's yesterday's activity. All right. So that's yesterday's activity. We'll scroll over a little bit. It came in here. There's that decline. Again, the ones with the arrows on both sides is just where they stall the market out for at least 4 or 5 bars. Because most of the time when they give you the pattern, it should do the distance of the pattern. And in most cases, it'll go 4 to 5 bars before it come back, most of the time. But yesterday, I know was a bit of a different kind of scenario they had going on. But I have it works. Here's your trend, 7 bars, 7 bars. Okay, 7 bars. Now in here, if you count 1, 2, they got to be lower. So we got to go, let's go to the downside because you may be new and you don't know. So we got 1 red bar, 2, that's 2, that's 3. This is 3. You skip this in here. That means nothing. That's 3. Okay, and here's 4. Let's go back up. That's 1, that's 2, that's 3, that's 4. Got to close lower. Here's 5, and that's just 6. Let's go back up. All right, so now let's count it again. That's 1, 2, 3. Matter of fact, let's use our arrows on this one. Let's use our arrows. We got 1, 2, 3, 4, 5, 6, and that's 7. Right back into here, center of our trend. Now let's measure this one down. I want this to be very simple for you, a place where you can come and learn this information and start just again making sense when you trade. Don't let these guys just run you over and do whatever they want to do. You don't have to tolerate that at all. You really don't. You just have to pick your fight. I know yesterday the bars may be a little bit big, and so the risk. Remember, I told you the risk is what you're going to end up having to deal with because that's timing, and timing is a bit of a challenge unless you have a different way of approaching it. And I'll try to tell you something else about timing. Hopefully it'll show up in real time so that way you can benefit from that information as well. I'm here trying to give away a lot of information that otherwise you would have to pay thousands of dollars in order to learn. All right, so because they spend time with me, that's what it costs. So I just want to have I'm giving you information because I really want your trading to work. I don't want nothing from you. I do have an indicator suite with indicators. If you want them, they're there for you. It's only $200, so you can have my indicator suite with $200. I got a wonderful developer. I want to say Gabriel. Gabriel, awesome fellow. He took my training, just awesome guy. He's actually helped code a lot. Where he coded some indicators, not help, but he coded some indicators for me that I found very useful. I just told him a couple things I wanted to see, and he was able to get it done. And I'm just so thankful to have him on board. But wonderful, wonderful individual. I want to say that he has contributed to the suite. So yes, I do have indicators. You don't need them to trade. That's why I'm putting a plain chart in front of you so you know how to trade without indicators. You don't need them. All right. And I've mentioned that several times over. They're just to assist you. It's like having me on your chart. It's complimentary. That's all. Complimentary. So if you want a professional's opinion on your chart, that's what the indicators would do. It apply the signal and say, hey, this is what he thinks about the market. It should work. So now we have 7 down. Here's the center of our trend. How to time yourself into this. All right. So now when they got back up here, if they're not going to break this high, okay, then they didn't want to break it. So let's get our high here, high 126.75, 126.75. Let's go over here. 125.75. So they came in just really below it. Now I know this turn is weak. They closed above the mid. All right. Kind of the same thing on the bottom. All right. So they closed beneath the mid. All right. Even though the trend held. All right. Now I want to show you this. They took out your trend. See? They came right back and they took out that trend. Well, today is today. All right. Let's put our little level on this on the top side here. And this high is weak. I'm telling you that right now. All right, so now let's go look at some of that information that I'm going over with you right now. See, they blew that high. See, it should come back and knock that high out. They shouldn't take out the mid. Just want to say that to you. Now, this is today. All right, so 9:30, right about here. It's a little easier today. I'm pretty certain for those. But For those that may not know, yesterday, yeah, you can use some of the information I'm telling you right now, and you could definitely get away with making trades. You can get away with it. Now, will it work all the time? No. But I want to show you that what I'm telling you, it showed up the day before yesterday, it showed up yesterday, and now it's showing up today. So here we have the same information. Then we're going to go into real time and look at that for about 20 minutes. All right, so we had the increase. Let me draw it out for you one more time. So we had the bar with the wick, and then the one with the little wick, and then we're getting the body, and then we're getting a bigger body. So we want this body to fit inside this bar at least twice. All right, so now if we can put them both together, that's majority twice reiterated. All right, so that means the minority is compelled to follow. Compelled to follow. Now, before 9:30, if you saw this trend here, let's count our bars. I'm gonna put this in here for you too. That's one, two. Okay, that's two. That closed higher. Three. This one, three, four, five, six, and there's seven. I know a lot of people always talk about structure break, structure break, structure break. And I guess if you want to call this some kind of structure, I don't know. And most time people, want to, but if you have run-ons, how do you know it's a trend and it's turning? Because in order to, I don't know, go in this direction, you want it to stay in this direction for a while at least. You can't wait till it get way up here. You need to be in it from down here. So now we have a trend here, and if you want to consider that a structure break, that's fine. If you want to go with that, but sometimes the market create these run-on scenarios, and it's just difficult to see where it is that it could possibly go. And I want to help you see it. You can use just the bars to find a trend. You don't have to have any kind of moving average, trend lines. You don't have to have any of that stuff. You don't. You really don't. Just use the market. The market is telling you what a trend is and how far it's willing to go. And so there's the trend distance. It made it. Now, this is a trend down. Let's take a look and just pick this apart before 9:30. One, two, that's three, four, five, six, and that's seven. All right. So now we're going to measure this. Now it can't be both. Remember, it can't be both. It always have to be that one of these are going to fail, because we can't stay, in these two trends all day. At some point, one of them will fail. You just got to be patient. And the goal is, can you interact with it before it fails? That's all. And so it made it. It went back up there and then it made it. See, there it is. And then you can count that back over. All right. Now, there's that information. All right. So there's that increase. Here's the bar with, four more bars inside of it. Here's a bar with four more bars inside of it. And then here's that fantastic signal that didn't give you anything. That's bad, because remember, this is majority controlling the minority. Why is it that this bar setup didn't want to get back up there? And that's bad. So take that as a signal and go that way. All right. So it's really simple. All right. Now let's take a look at real time. I don't want to bore you, so let's take a look at real time. Let's go down in our time frames. The daily. Let me touch on this again. Any kind of indicators you're seeing, except this chart right here. This is big trade, and the value area, devalue area. There's some other indicators in here. I just got this in here so you can kind of see it in relation to the time and sales. Nothing really important. You don't need this stuff. I just like a little flashing whenever I'm trading, just a little bit. But these indicators are mine. Matter of fact, Gabriel created this setup, and this these strips here. Awesome guy for doing so, just awesome. And he created this for me as well. Really great programmer, putting stuff together for me. I want to definitely acknowledge him. Thank you so much for doing that. We got our prior bars high, okay, and we got the prior bars low. So it's going to tell you how many ticks away from the high of yesterday's high or yesterday's low. And then, of course, the pivot range high, which is your market analyzer, and your pivot range low. If you don't have this indicator and you bought the indicator suite, just download from the link that I sent you. Just download from the link that I sent you, and you will have this indicator in your indicator list. So just use the latest link, the link that I sent over some time ago. Just click on that link. It should be there. I just updated the files. So, but yes, it will give you the distance from the prior bars high, prior bars low, the pivot range high. Okay, this is our threshold. We get ready to talk about that. And our threshold, pivot range low. And then, of course, the mid of the bar, that's it. It's on now. It's going to tell you how far from the mid of the bar currently that you're away from it. All right. And of course, the close to the prior close, which is important based on yesterday. All right. And I went over this on the channel as well. The close to the prior close. Yesterday, we were beneath the close yesterday. Yesterday, we were beneath that close. And so it's going to give you a lot of that bearish, just trying to, again, just trick you, just give you a lot of back and forth. However, we had our increase. Okay, remember the big wick, little wick, small body, big body. We had that coming from, from below. So we had both scenarios. All right. Let me just kind of blow this up just a bit. We had the big wick, okay, little wick. We had the small body, bigger body. So they're on this bar. There's no question about it. They're on this bar. The threshold is there. See that our threshold is there. But yesterday we were operating beneath the close. Okay. And that, again, the indicator will give you that information as well. Okay. So it provides you that information about the close, how far away from the prior close that you are. Now, the pullback distance, again, is just, how far the market should pull back as well as the trigger. So just some other little information in there. And of course, we got our ATR in there. So just some useful information to kind of give you an idea how far you're looking for the market to get to somewhere that's important. That's all. But I'm trying to teach you how to look at the market based on trends so you can just kind of know how far it can go, or the bar pattern itself. Okay, so here's our bar pattern here that we just went over. See? So you don't need indicators, but if you want, yes, we do have them. All right, we do have them. And again, it's just $200, loads of indicators. I'll show you the indicator list just briefly. If you want them, you're more than welcome to them. Absolutely more than welcome to them if you want them. Just tons of them, tons of indicators. All right, so there you have it. All right, now want to give you information that makes sense. Just absolutely makes sense. Now let's talk about that wick. All right, so you see the bar here. All right, so today we may not close outside of this high. So then you got about 4 days of it doing that, just overlapping inside of that bar. So all things that I'm telling you are on the chart. I want to make sure that you're understanding that. So everything that I'm disclosing to you, you can find it on any time frame. So we stopped here, 1, 2, 3. Here's 4. So we may get 5, and then it'll take off. All right, so let's see if it can do that. Now let's go into give you some real time here. Let's go into a 15 second. Let's go into our 15 second, and let's get the no touch, no close. Let's just kind of go in here and get the no touch, no close. No touch, no close. I want the levels, and let's get the bar color. No, you know what? No, let's go with the here it is. Come on, where is it at? We're gonna get the levels. We'll get the levels, and we're gonna go with the one with targets. And Gabriel made us this one, and it's just fantastic. So let's put this on here on this 15 second. It's gonna give us the target as to how far it's suggesting that it will go. So, and again, if there's an indicator in here that you see in the indicator list and you don't have it, all you have to do is download from that link. Give it a moment. It's coming. Got a couple days on the chart, just a couple of them. All right, so it's supposed to have got up here, but it's turning. So it's turning. This is a 15 second chart. Let me just kind of move this. Well, I'll leave it like it is. Let me just open it up. All right, so based on that, it's saying that the market can get here. All right, so this pattern is saying that the market can get here. Let's blow this up and see what kind of do we have any kind of trend going on here. So we have a trend down. I don't know. Maybe they're trying to go in and make a trend back up. Okay, yeah. So they may be trying to make this a trend back up. Let's count these bars really quickly here. I'm going to read this with you for a bit. 1, 2, 3, 4, 5, 6. That's 7. Yeah, it's 7. I'm sorry. All right, so we got 7. All right, so that's why it's turning back around, and it didn't want to make that distance. I get it. So now we just would go here, just kind of throw this in here. Let me kind of lay out that chart scale too, and then I'll shrink it down where you can see everything. All right, so let me just kind of layer this information in here. Let me kind of lay, you know what, I'll just leave it like that. Let me just layer this information in here so that way you guys can see this. Now it's saying it can get this far. So there's the target based on this pattern. Based on this pattern, if it doesn't come back past this pattern, you're expecting it to get up there. So the indicator is telling you, hey man, this is how far it can actually go. Now let's see if our trend lines up with that information. Yeah, that's not bad. Okay, so that's not bad. Now it is suggesting that it's going to come here based on that pattern. Now, if it want to stay down, now this high is weak. I do believe they can get through this. I do. Whether or not they want to do it while I'm up here, I don't know. But this is not going to work. They closed above the mid of the turn, so they should be able to get through it. Now it made that target. Now this target is suggesting that they can get here. Can they go down first and then come back up? Yes, they can. I would definitely say to you, now here's the center of the chart. Let's go at it from this angle. Let's go at it. Let me use this one. The center of the chart is here. Okay. Now here's your lower half of your chart is here. You just divide it in half again. And here's your upper part of your chart. Give or take. Give or take. All right. So this is kind of what you're dealing with. Yeah, they can get through this too. They can. You don't want them closing beneath the mid of your turn. That's not what you want. There's a couple other things I can tell you, but that's not what you want. So they're at the mid of the chart, kind of overshot it just a little bit, but they're trying to come back this way. So we got a couple targets down here that they can hit should they want to hold, in this direction. Let's see which one is going to happen because we got a trend here. We still have this trend here, and it can't be both. Now, so the trend from here is 1, 2, 3, 4, 5, 6, there's 7. So the center of that trend is roughly right here. All right, so we got a center of our trend roughly right here. So we can get sandwiched kind of in between two. Center of the trend here. And again, this is a 15-second chart. It'll work on anything. Center of the trend. So we're going to go COT here. And then we got a COT here. Just kind of put this in front of you. And then we look at the other stuff. All right, so that's what we got. All right, so now the thing about this, the thing, oh, I did this. I had this. Oh man, I had the chart compressed. Hold on, do forgive me. I didn't realize I had that going on. Okay, so the center of the chart here, I had the chart compressed. That's probably why we're having that problem right now. There we go. Had the chart kind of compressed. I had to hit the F. But the center of the trend still is there. I mean, that's there. All right. So we're getting okay. So the mid is here, mid of the chart is here. So yeah, they hit the center of the chart, upper part of the chart, and there's the lower part of the chart. They pull back into the lower part of the chart, they're rolling over. All right. Sorry about that. I had to hit the F to size the chart back correctly. All right. Just was trying to show you your targets below. We have some targets below that is given us based on the indicator plotting. Now, and again, Gabriel, thank you so much for creating these wonderful tools. Absolutely awesome. Thank you so much. You guys, let Gabriel know he's appreciated because this is awesome. The stuff that he's been able to accomplish with the information. So glad to have him on board. Now, the thing about the chart scale, the universal chart scale approach, is that you're not looking left. You don't have to look left other than to count your trend. You don't have to look over your prior pivots and all that. I don't have to shrink the chart and say, hey, man, what we're doing. The goal is to look right here on the hard right edge because this chart scale, it's in front of you. And so it's going to turn in front of you unless you plan on closing your eyes and not looking. The market would absolutely turn in front of you and you will see it. All right. So all you just need to know is generally where is it likely for that to take place. That's all. And so right here, and definitely if it gets up here. Now, this scale does adjust. It moves. It constantly calculates and moves. But I have you know that even though it does that, if you just remain consistent with how you view the chart, even though it moves and adjusts, you just say, hey, this is the lower portion. Here's the mid of the chart. And here's the upper part of the chart. Chances is that it will happen. Chances will be that it will happen. Now, here's our scenario. All right. So here's our scenario here. Pretty fantastic, I think, and they blew the low. All right, so remember the wick. Okay, you got the wick, and then you got a no wick. That's that scenario. Okay, and then we got a small body, and then we got a bigger body, and they pushed. All right, now will they give us? Yeah, there's the distance of it all together. All right, so that's that. Now let's go and look at, I guess, the rest of this stuff. And again, this is just information, just information. That's all it is. So trying to see if they can get through this high on this daily. We'll see if they can get there. Maybe not today. I think they won't make it today. I don't believe they will. At least I won't be up here when they do it. But I do suspect that they will get there at some point. All right. So now Kind of the same ordeal. Now we're going to go with the patterns because if you don't know what this pattern is, I want to tell it to you if you're new. Um, what we're doing is, I should have got that. Don't worry about it. The mid of the bar is in between the black lines. All right, the mid of the bar. We want to get a bar. I'll explain it to you if you're new. We want to get a bar, and for the sake of going down, we want to get this bar here that's jumping up and down, up and down. We want the mid of this bar to fall beneath the prior bar's low. All right, so we want the mid of this bar to fall beneath that bar's low. Okay, now if that mid falls beneath that low, the market will potentially keep going. I just say potentially because they can turn around and do what it wants to do, but I'm just telling you that's majority. Okay, a majority of this bar has just fell beneath this bar's low. Chances is they're not coming back past this bar's high. They won't. Now this becomes the no close bar because sometimes they come up, but they won't close above this bar, and then they'll take back off. And so this is a no close bar. There's an indicator in there that'll put the NC. See, like this one has an NC on it on the daily right here. This one has an NC under that bar, and there's the level. They came under that bar for 3 days, and then it turned around and went right back up. So I got an indicator that put the NC up there. I just don't have it on this chart. I just don't. But that's what we're looking for. Now, when it comes to because I went over the threshold. Let me go over the threshold one more time because I want to make very plain what that is. Okay, so this is our wick zone. All right, so this right here is our wick zone. Those two lines on the bar is our wick zone. So we want to see price kind of trade right. I just want to make the candles just a little bit bigger. Want to see price trade right into those lines, those two lines here, and come out of it. That's it. Okay, and that's our wick zone. Now, typically, once that happens, it'll push outside of the zone if it's going to go up or if it's going to go down. Either which one, it can do either. All right, so kind of framing it all out for you. Just want to let you know what it all looks like. All right, so now lower half of the chart, we're still kind of sitting right there. This the mid of the chart. I don't care if your chart is big, full screen, not big, whatever. You can go like this. Just mid of the chart right here. Can they stay down or will they keep going up? I know we got a target. It's saying they can get up here to at least the center of this chart. So let's see if it's going to get there. Let's see. Now, they're at the lower half of the chart. Okay, they're at the lower half of the chart. Now, that's that scenario. So we got the no touch pattern. Again, you're just trying to get the mid of the current bar. This bar is right here. That's trading. You want to get the mid of that bar above the bar's high. It's not happening. Remember, I told you want to try to get a bar? And this is a very difficult thing for the market to do. You try to get a bar, and it's really simple. You don't need a lot of different terminology to get this stuff to work. You just want to get two closes, well, two closes above that bar's high to go up anyway. Oftentimes it don't want to do that. It just doesn't. So if you can get one, great. There's a good chance the next one coming right back to tag that high. It's not one of those things it likes to do. Now it can keep going, and that'll be just absolutely fantastic, should it? But most of the time it won't. Now, to know if the gap would show up in between bars, let me go ahead and talk about that because I know a lot of people love gaps. Gaps, just want gaps. All right, so here's a gap between these two bars. What I just told you about the mid, if the mid of this bar falls beneath that bar's low, there should be a gap on the next bar. There should be. Most of the time it will be. Oftentimes it will be. So wherever you're seeing a colored bar, be it green or red, that happens in two bars. Okay. See, yeah, it came back. Take that. That happens in two bars. You don't even need this third bar to know it's a gap between two bars. It's going to be a gap between two bars if you can get this mid of that bar to get above this bar's high. Excuse me 1 second. All right, do forgive me. I'm again just getting over a little cold here, so kind of get dry a little bit. So, but yes, so I want you to see that yes, this is very simple. It's not complicated. I want to have you know that it's not okay. So they made that target. It's right here. Even though they didn't give us no more information about targets per se, based on that setup, the no touch, no close setup, they gave us this target when this turned green here because this bar's mid is above that bar's high. Said, hey man, we can get this far. They made it. Now they're at the center of the chart. All right, now they do have an uptrend here. Let's count that. and then I will be gone. I don't want to hold you any longer, but I wanted to help you guys with something new, a new video. And if you don't mind, hit the like button, share it with someone, tell someone about the channel, tell them, say, hey, it's a library over here you can learn. And the guy would read it to you in real time. So that's one, two, three, 4, 5, 6, and we just need one more, and I believe it's here. That's 7. No, let's go 7 here. Let's just go 7. Give or take. Give or take. All right, so they're coming back this way. All right, so this may not hold. Let's see. Let's see. I do believe, and I told you that that high is up there is weak. That's weak. So they should be able to take this out. I don't know. Let's see. Let's see if they want to turn back from the center of the scale. Remember, I told you this is the center of the chart. They can turn and come back down. Now we do have the lower half of the chart, which is here, and they're trying to base at it. This is the lower half of the chart. They gave us a target. I'm pretty certain. Yeah, it's like right below that trend. And again, the indicator will plot all of this for you. Okay, and these indicators over here, they're important too. I mean, got bar coloring in here. It's not this bar color. It's a different bar color. It kind of spells out what's climactic. That's all. And this is a 1 second, a 15-second, and 1 minute. You got 3 strips here that's calculating something different. You got 3 arrows calculating something totally different, and there's multiple time frames in each. So we got, I don't want to have to go through all this, but we got seconds in here trying to total that 1 minute bar, and then here we got the 1 minute, 5 minute, 15-minute hourly. So we got multiple time frames in all of this, and then of course these 3 strips are calculating something different. The information on the daily. Okay, so we had it on our daily here. Let me just size this so you can see it on the daily. We have those same 3 strips here. That kind of helps with, again, that timing, that information that you would need to know about directional trading. And you would like to see all 3 of them firing off, to be honest with you, to go, and get as much as you can in that direction. But oftentimes they don't always want to do that. And it'll be great if they did. That's all I can tell you about that. It'll just be fantastic if they did. Now, notice they're overshooting the no close bar. This is the no close bar right here. They even overshot the stop here. They went right above it, but they never closed above this bar. They haven't done it. This is the no close bar. The no close bar is in front of the bar that's supposed to have the stop. Okay, and that's typically not good. All right, so we don't want them to overshoot the stop and still not want to close above this bar. Close above this bar, please. Otherwise, it'll take another dive. So we don't want that. Now remember, our center of our trend, because we have a trend here. So the center of our trend is pretty much this lower half of the chart. Now they're coming back with that pattern again, and they're telling us, hey, even though your pattern failed here, we still got that target. We still got that target up there, and supposedly, I told you they can get up here. I do believe that. So just want to give you a couple more minutes. We got another target. Hopefully they won't trigger this pattern. And again, there's your gap. Okay. You're going to get a gap if this mid, most of the time, if it can get above this bar's high, you're going to have a gap. It's just that simple. They're still hanging out at the center of the chart. We haven't really progressed at all. We really haven't. So we're getting kind of trapped right between the center as well as that lower portion of the chart. We're kind of getting both. So when it comes to the tools, again, they're just complementary if you just want something on your chart. If you're using the indicators, please, people, if you're using indicators, I want to say this to those who've already purchased the indicators. Pull out your market analyzer. Please use this. Okay, don't let this get past you. This is the pivot range low, pivot range high for yesterday, which is important. All right, so we kind of traded down beneath that today, and now we're coming back up through it. This is today's activity. So if you're watching the video, you may be able to get an idea what tomorrow's levels will absolutely be. So we're trading based on what will happen moving forward. We're not doing that hindsight backwards stuff. We can do what's forward too. And so this is giving us ideas. Dynamic is still moving, but it's giving us an idea where tomorrow, where we want to see the market close. Okay, so we want to see the market close here, above here. All right, above this price. All right, so they can trade beneath it. We just want to see them close. See, they're back above at 81. They're back above it. Not great. Well, they're slightly beneath it. They should be able to make it, hopefully. Well, no, they're above it. Oh yeah, we're above. We're well above it. I'm sorry. I'm looking at the. There's a 1 right here. A one on the scale is 0 here. All right, so yeah, we're above it. Thought that made sense. 'Cause I can see it right here. We're above it. All right, but yes. So and then here it's measured out. All right, so it's measured out again, telling you how far away we are from all of this information: the prior high, the prior low, the pivot range high, the pivot range low, the bars mid, the one that we're currently on, as well as that prior close, which is really important. We want to make sure that we're operating in the direction that we will want to go. So if you want the market to close in your favor, well, be outside the close if we're going to close higher, and vice versa if we're going down. All right, that kind of just makes sense. So can we get this to go down? Here's our scenario for a short. Here's the scenario for the short. Remember the wick, no wick, the body is being increased. That's suggesting that they may go a bit more. Can we hold this turn? Can we hold it? Let's see. Let's see. I know we did fairly well off this bottom too. That's not bad. They may want to dig back down here. Okay. Just getting that threshold and project it forward. Hopefully they'll come in. This is pretty good. Can we get an increase in the body size maybe? Get the increase in the body size, maybe, possibly. Come on, a bit more, not too bad. But it's not exactly what we need to get them to get through here because we know they're here. I mean, it's right there on the chart. It's telling us that they're here. All right, so if we had to recalculate all of this and just kind of bring it back into focus, all right, so let's just do this. Again, all the information I just went over is really simple. Don't make it complicated. All right, so they're trying to pick it up here. They're up here. We do know that. All right, so yeah, see, they're coming back with that scenario again. And again, this is real time. You don't have to wait until the bar closes. You can just go ahead and take it and close beneath this, so they can definitely run this low. Will they do it? I don't know. They're trying to recover. They're trying to recover. I know they closed beneath that mid, so they can get through this low if they want to. But I really don't like that up there, so I know they're going back up there. Yeah, they're here. We do know that. You can see the wick. You can see the wick. That's reiterating what was here. You can see the wig, body, all of that kind of making sense. And they're not yielding, much of anything in that direction. So let's see if they're willing to hold this turn, or will they turn back down? They're trading right back into the lower half of the chart. Remember, this is the upper half of the chart. That's the lower half. They pulled into the lower half of the chart and they're rotating again. Rotating again. You can go back and check your charts. It's 212. This is Tuesday, the 24th. Okay. Just want to go ahead and let you know I'm the guy that'll read the chart to you in real time. I have a live trade section if you want to go look at that. I've done 1,000 ticks in a trade, past proper counts in 20 minutes. If all you have to do is click on videos and you go watch all that. It's pretty boring because once you learn how to trade, it doesn't matter watching someone trade. It really doesn't matter. It's not going to help you with it if you don't understand how to trade. So I'm more keen on educating people. I'm a trader, but I also educate. So I want to make sure that you understand how to read the market, how to read it. Let me tell you one last thing before I go. Try to make it a little bit more useful for you. Um, when it comes to this type of stuff, again, I'm not someone that, have to lean to this information, and neither should you. That's why I'm trying to tell you how to read it without it. Whenever the market is ticking, then I will go. If you see the market moving, okay, on the bar that is moving on, all right, see like here, it's jumping up and down. If it retrace, okay, backwards and then it hurry up and push like really hard with no hesitation, no hesitation. Now, you don't need all of this. I'm telling you how to read it without it. You don't need this. If you see like here, okay, you see how it came up a couple ticks, but then it pushes down harder. That's telling you that that's pressure to that side. That's all. It's pressure to that side. So, and you'll have to do it. You'll have to practice this. What I'm telling you, you have to practice it. You have to practice it. Really have to practice it. But see how they're not breaking the top of this wick. It's pressure to that side. That's all. It's pressure. It pulled up. Okay, you can rewind the video. It pulled up a couple ticks, and then it pushed hard again. Okay, it pushed hard, really hard again. It's pressure on the top of that doji. I hate dojis, but it's pressure on the top of that. It is for it to go down. Now it can do it on every bar, it can, but I have that that's important. The back of that bar was important because how it lifted up. Okay, you can rewind the video. It lifted up like a couple ticks, and then it pushed real hard, really hard. It pushed again, kind of wiping out the effort that was there to lift it. Just kind of just popped it right back in that direction. Whenever that happens, that bar pretty much is safe. So if you're trying to deal with time, and I don't want to get into a lot of timing stuff, but I just want to throw something else in here because I may not come back for another day or so, or I may come back and we'll take another look at it. I don't know. Just depends on, because I got to get over this cold. Of course, I told you I'm not up here trying to grow no channel. That's not it. Want to help you learn how to trade. So it pops and it takes back off. Here's another little tidbit to know when it comes to directional trading. When the bar opens up, okay, no sooner the bar is opens up, you got to see which direction it trades in first. See, no sooner it opens up, I know it was a tick separation there, but no sooner it opened up, it pushed down first. That's important. That's important. You can do with that whatever you may, but it pushed down first. It's really important that you see which direction did it push. No soon the bar start. As soon as the bar starts, which way did it go? And preferably 3 ticks. I want to say that to you. Preferably three. Very fluidly, nonstop. Just sweep 3 ticks in one direction. See what they're doing now. And so you want to see if they could just immediately just three right in that direction. That's good. If it opens up, and I don't care what time frame you're looking at, you can look. It's probably more relative if you're trading intraday. But try to see if the bar open up, and the moment it opens up, just see if it can just trade in that direction that you want to go in. 3 ticks very fluidly. Now, again, just another little tidbit about the fluidity of price. You don't need this down here. I just got it here. I like to see a little flash. If you see price move, and I don't care if it's a 15-second, 1 minute, no matter. You see price move, and then it come back towards you, okay? And then as it comes back towards you, not a lot of ticks, maybe just a couple, and then it just push real hard again. Yeah, chances is, yeah, they're going that way. That bar should finish in that direction. Most see this right here. It just did it to the upside. So let's see if it won't come back under this bar before breaking that high. Let's see. Let's see. Let's just see. I just saw it do it. It don't have to, but let's see if it can just go ahead and run through this high without breaking the low of this bar. I just saw it do it. You got to do it on every bar. You got to do it on every bar. Just kind of keep that in mind. You got to do it on every bar because the market is fluid. It's very fluid. They're on the back of this bar. Okay, they're stalling at it. I wanted to see now they're getting aggressive off the no sooner it opened it pushed down that okay, and that's why I told you about that as well. No sooner it opened up, it pushed 3 ticks really hard in this direction. So yeah, go back and pause the video, take a look at it. They did respond. They responded when they got near the back of this bar. They popped up, but they didn't. Oftentimes, it just pushed really hard, kind of like this. When it hit that doji, it just took off. All right. So that's my time with you. I hope you found this information useful, and I wish you all the best with your trading. Take care.